Hey everyone, in this video we're going over Meta's Q2 2023 earnings report. It was just announced today, the report. Stock is moving on the earnings. We're going to discuss the stock, the valuation, what I believe to be fair value, and we're going to get a little bit more detailed into their report. Now before we do, if you could smash the like button and subscribe to the channel if you haven't subscribed. Now let's get into it. First, when we look at the stock in after hours, it moved up over $20. This is after already going up over $4 in the day. This is up about 7% or so in after hours alone. Now the stock was up $207 from the bottom. This is a 228% increase. Basically, the stock's 52-week low was about $88 a share, and now we've surpassed $300. We're at $319 in after hours. So the stock has moved up significantly from the low, but the question is, where does the stock go from here? So in the earnings report, it starts off with a line from Mark Zuckerberg saying, "We had a good quarter. We continue to see strong engagement across our apps, and we have the most exciting roadmap I've seen in a while, with Llama 2, Threads, Reels, new AI products in the pipeline, and the launch of Quest 3 this fall." When we're looking at the quarter as a whole, we see for 3 months ending June 30th, they did $31.999 billion in revenue. This is up 11% from the $28.8 billion they did in 2022 in the same quarter. Their cost and expense went up 10% as well to $22.6 billion from $20.4 billion. Their income from operations basically being 9.39, so about $9.4 billion in this quarter. This is up 12% from the $8.35 billion a year ago in the same quarter. Operating margin remained flat at 29%. Their tax rate slightly lower, and net income up 16% year over year at $7.78 billion over $6.68 billion a year ago. Now looking at segment results, the family of apps revenue, which is basically most of their revenue since that's where they're making all their advertising money on Facebook, Instagram, Threads now. Family of apps had $31.7 billion out of the $31.9. The only revenue that came from Reality Labs, which is their Quest products, virtual reality, augmented reality products, was $276 million. So this is an extremely small business when it comes to revenue for them, but it's a huge expense for them. And that's been something that investors have really not liked over time. And if we're looking how their revenue has changed over time, we can see that the family of apps revenue has basically been steady to increasing. It was $28.7 billion in Q2 2021. Now it's $32 almost billion this quarter. It did top out in Q4 2021 at $32.8 billion-ish. And their Reality Labs revenue has been kind of stalling. We see it kind of top out on the holiday times, but even this last holiday was less than 2021's holiday, and it's right now sitting at a pretty low revenue, the lowest revenue actually that they've ever had in a quarter for it. So it's not a fast-growing business for them. And when it comes to the net income coming out of these, the operating income, the family of apps operating income was $13.1 billion for the quarter. But when it comes to Reality Labs, even though they only do $276 million in revenue in the quarter, they're losing $3.7 billion. That's their operating loss in the quarter alone. So it's a massive operating loss, and that brings their income from operations down from what could be $13.1 billion if they weren't in this business, in the Reality Labs business, down to $9.3 billion. So they are spending a lot of their money on Reality Labs, and they're not seeing much revenue from it. So it's obviously something Zuckerberg believes in the long term will pay off, but clearly still does not pay off for them. Now, when we look at that Q2 net income number of $7.78 billion, and we want to see how it compares over time for this company, before they had this huge metaverse expense, they used to do around $10.3, $10.4 billion in 2021. And then we see this net income start to significantly drop from Q4 2021 downward from 10.2 to 7.4 to 6.6. down to $4.39 billion in Q3 of 2022. Now, thankfully, they changed course because it was getting very scary for investors to see the net income get that low. And Meta obviously took note. The stock was crashing down because of it. We saw the stock get down to $88, and now slowly increasing. We're already back to $7.78 billion, and this is still with a large expense from Reality Labs. Then when we look at their earnings per share, diluted earnings per share, we're at $2.98. So as they brought that net income up, as they've been repurchasing shares and stuff, we're seeing the EPS go up quarter over quarter as well. Still not back to the levels it was in 2021, but meaningfully making its way back. We then look at the family daily active people. So how many people are using their services, their apps, Instagram, Reels, Facebook on a daily basis? And they have broke to 3.07 billion people this quarter using it on a daily basis. This isn't the monthly actives. This is the daily actives. So they are still increasing their user base. It's really impressive how many people use a product that comes from this company. And for everyone who thinks Facebook is dead, and I'm not talking about the company Meta, I'm talking about the actual platform Facebook, they're at 2.064 billion daily active users, not monthly again, daily. They're at over 3 billion, I believe, for monthly, but daily active users, over 2 billion people, and this number has increased. So even when we look in the US, some people say maybe just overseas, in the US, I mean, it's only growing very little, but it went from 200 to 202 million people using it on a daily basis. So an additional 2 million people in the US alone, and Canada, I'm sorry, are using Facebook daily that weren't using it a quarter ago. So we are seeing, obviously, for the whole family of apps and the Facebook, the original OG app from the company, continue to grow and have a strong user base. And if we look at the free cash flow generation from this company, we're back to 10.955 billion in free cash flow. We see the net cash provided was 17.3 billion. When you take out the purchases of property and equipment, 6.13 billion, and any principal payments for finance leases and whatnot, 220 million, we're at free cash flow of 10.955 billion. This is up significantly from just a quarter ago of 6.9 billion. So massive increase, still not at where it was when it did in Q4 2021, 12.5 billion, but clearly in that realm rather than when we were seeing only 173 million of free cash flow in Q3 2022. That was a scary quarter for investors, including myself, who was highly invested at the time. So now let's just look at a couple other little parts about this earnings report. One, share repurchases. They mentioned how they repurchased $793 million of their Class A common stock in the second quarter of 2023, and they had $40.91 billion available for them to be allowed to purchase stock with. This was authorized repurchases by the board. The cash equivalents, and marketable securities had hit $53.45 billion at the end of the quarter on June 30th, with free cash flow, like we said, $10.96 billion in that quarter. Their long-term debt is just sitting at $18.38 billion, so obviously way more cash than they have debt. A great surplus, I don't know, $35 billion or so of additional cash. Their headcount at 71,469, so a lot of people work for this company, but it is a decrease of 14% year over year. Approximately half the employees that were impacted by those layoffs they announced earlier in the year are being reported still here, so we're going to see that number come further down. But if we just talk about those stock repurchases for a second, I was thinking it seemed low compared to what they usually buy. So I looked up to see what last quarter the number exactly was, and they repurchased $9.22 billion of stock last quarter alone. So on one hand, it's great that Meta took huge advantage of the cheap stock price that they had for quite a while, knowing that they were going to be able to execute, and bought tons and tons of stock back for the last year or so, year and a half. But the thing that gets me slightly worried as an investor is if they still felt they were going to grow far beyond where they are, then they would still be buying their stock up in large bulks. I mean, it was multiple quarters of many billions of dollars per quarter, and now we get less than $1 billion, 793 million of repurchase. It tells me that the board is not too confident in rebuying their own stock at today's levels. Now we'll talk a little about their guidance, and then we'll get into valuation. They said that they expect third quarter revenue to be 32 to 34.5 billion, so an increase over the second quarter's revenue. And they also say in one part that for Reality Labs, they expect operating losses to increase meaningfully year over year due to their ongoing product development efforts in augmented reality, virtual reality, and investments to further scale their ecosystem. So that clearly gives me a little bit of a worry because they already spend so much. So to increase meaningfully their operating losses for Reality Labs is definitely a little scary. So we'll have to see what comes from that. So valuation. Their current market cap's about 765 billion. They did almost 11 billion in free cash flow or 7.7 billion in net income, and they clearly are making all these investments in AI and the metaverse that either could pay off or might not. But in the meantime, they're definitely hurting their net income. So if we just assume a flat $10 billion a quarter and we expect it to remain, let's say, steady, then we'll get about $40 billion a year for them in free cash flow slash net income. And since they're investing in the future, I think they do deserve a multiple of around 20. So 40 billion times 20, easy back of the napkin math, gives them a market cap of about 800 billion. And the stock trades for just under 800 billion today. If you include the cash, you're getting closer to maybe 730 billion or so market cap. That said, not too far off. So if Meta can slowly grow its profits, I do think the stock is basically trading for a fair price right now. If their sales decline or their expenses get too high because of the metaverse, then it might be trading a little too expensive. Now, Apple Vision versus Meta. We know Apple released their first product. It's not out yet, but they've showed it off at WWDC. Apple's getting into VR and AR more with this headset, and that's going to bring a lot of attention to the space, which is good for Meta. And Meta is clearly the more affordable player in the space as well. But my largest worry is down the road. I think Apple will eventually release a price competitive headset with Meta, and that could destroy them in their own game after they've spent so much money in this business. It's definitely one of the bigger unknowns going forward for the metaverse is, will Meta be able to get the revenue they need to support a expense as high as they have in this industry, in this metaverse they're building. And another big unknown is still Threads, how big it will get, if it will die off, what it will do for the business going forward. I mean, these are things to think about. Now, if you made it to the end and you haven't liked the video, please smash the like button. And if you enjoyed videos like this and you're not subscribed, please subscribe. Until next time.